Hey, it's Tiny, and this video is going to talk about the advanced decline line. This is a chart of the day session S&P 500 on the 5-minute chart, and below it is the advanced decline line on a line chart. So what this does is every 5 minutes, this will print a dot, and then it'll connect the dots with a line. So the advanced decline line is actually an index. The symbol is $ADD on TradeStation, I believe on eSignal as well. And you need the New York Stock Exchange feed in order to get it in real time. So I use the advanced decline line as one of the internal measurements of the market. It's like the pulse of the market, the heartbeat of the market. So first thing I like to do is bracket an 800-point range. The scale of the advanced decline line goes from minus multiple thousands up to plus multiple thousands. I don't know the exact numbers. I'm sure you can look it up somewhere, but it's not really relevant for how I use it. So I try not to get overwhelmed with information, because then I may read a little bit deeper into it. Like I may say, oh, it's not really that strong because really the advanced decline line could be plus 8,000 and it's only plus 2,000 or something like that, when I know now that plus 2,000 is a pretty strong reading. Anyway, when it's between, and I'm ahead of myself already, but when it's between this 800-point range, minus 400 and plus 400, okay, that's a neutral reading. When it gets outside, it starts to get either bullish if it's on the upside or bearish. And I call it committed or committal bullish, committal bearish. That's even a word, right? But the bulls are starting to get committed here, the bears are starting to get committed. Now, to me, it's not a timing index. It's not a timing indicator. Okay, I look at it to back up the move, what I'm seeing the market doing. All right, I don't look at the advanced decline line and go, oh, the advanced decline line's screaming, I got to get long. I look at the market, and then I look to the advanced decline line and say, what's it doing? Is it backing this move up? And you could see, here's an example where we just hung out in that 800-point range, and we didn't really go anywhere. We just chopped around. Then the next day, we traded lower, and you could see the advanced decline line was committed there on the downside. All right. Now, a couple of things to note about this chart, that I want to talk about here. Here's an example where we gap down. The advanced decline line starts nasty, and as the market grinds higher, the advanced decline line is going with it, backing it up. Over here, notice how price goes lower, but the advanced decline line is not confirming this. It's actually diverging, and all divergence means is price is going one way, and what you're looking at against it, what you're measuring against it with, is going the other way. So notice here how the advanced decline line didn't commit to the downside as much as it was the previous day. And then it committed here on the upside, and look how it just grinded out the day. The date I'm doing this is, it's now the 27th in the morning, but on the 26th, we had a sharp gap up. There was a big push in the advanced decline line. And then if you notice, it kind of sloped down as the market relieved some of the over-exuberance to the upside. And then it turned up here as the market ran. Now, it didn't keep pace with the market here. Okay, it didn't shoot up to new highs with the market, but it's not enough. Okay, I don't look at the advanced decline line and say, okay, this isn't confirming this big push, so I have to short it. Maybe I'll trail my stops tighter, or maybe I'll use different management if I see that. But there's nothing here that's saying, oh, this is really not strong. Now, the levels that I like to really say a move is strong on would be the 2000s or better, so plus 2000 or better, minus 2000 or better. Those are pretty good size levels, and they confirm a nice strong move. But once you get past the 400s, right, that 800-point range, it's starting to already commit. And once you get to quad digits, minus 1,000, plus 1,000, then you're really starting to see the advanced decline line confirm. So It's a good way, in my opinion, to potentially keep you out of trouble. Here's an example, a gap down, and you can see the advanced decline line is just nasty, down to minus 2500s, minus 2400s. It's just moving down and prices moving down. I'm not really in a rush to try to buy that. Okay, and it's the same thing when we're up big. Let me try to find a big up day. I'm not looking to fade that either. Here's one where it's up pretty sharply, up over 2,000, and I'm not looking to fade it. Then it starts to turn over a little bit, and in this, let me blow this up. This is looks like the beginning of February, so let me grab this. Okay, so you can see, like an example like this, it stayed strong, and then the market did start to weaken here, but to me, most of the time, I would actually avoid this short. So it's certainly not perfect, okay? And sometimes, it might hinder you from trying to get on a counter trend move. It's done that over the years to me. It's called, I call it the breath, right? Most people call it the breath, the advances minus decliners. And the breath reading can get strong and take a while to correct. So sometimes it'll keep you out of a potential move. But other times, such as this, where it's down early, okay, and then it goes neutral, and then it pops out, all right, notice how it's nice and strong, so it gives you confidence in buying that pullback because the breath is nice and strong. I made a comment to my private group of people that are taking my online trading course. I was record videos throughout the day, and I was saying I was not looking, even though the breath wasn't up at the highs, I wasn't looking here to short this market. I was looking for the market to go higher, and it actually did go higher. I mean, the breath just decided, hey, you know what? It just lagged. So it was still plus 1,500. It's still nothing to sit there and say, oh, let's take a chance on a short. So it confirms the move, and it can also keep you out of trouble. And like I said, it's not without its flaws. All right, it tends to lag sometimes because how I like to describe it is the breath is more of a cruise ship, and a cruise ship as opposed to a speedboat, right? The ticks, if you're ever using the ticks, they're a speedboat. They can turn on a dime, but breath is more like a cruise ship, which it takes a while for it to turn sometimes. All right, and here's like another example: big breath reading up early, and then it just kind of chops throughout the day. I mean, I guess this might have been a good short here, but mostly it was just choppy. All right, so that's how I use the breath in my trading. You may use it differently. Here's a great example where it confirms we gap up, and the breath just rises the whole day with it. Don't mind these last dump offs. Remember, these are the lines connecting. That's all that's doing. And the ES closes at 4:15, and the breath closes at 4 o'clock. So that's why you're getting these little swoops. It's the same thing here. Look at this. This is another great example of why I love using the advanced decline line. The trend is down. The breath is saying no, 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 no. And then we get this little pop-up right here, and the breath is, showed a little bit improvement, if I can get the word out, showed a little bit of an improvement, but not enough to say, okay, time to go long. No, it's still minus 2,000. And then, of course, we went out near the lows of the day on that day. So a lot of examples here. Here's an example, again, where it's nice and strong above 2,000, and then boom, it comes down, and even here, the breath is still kind of hanging good. So you may have missed this shorting opportunity. Like I said, it's not perfect, and sometimes you have to go just off price action if you want. Here's an example, gap up, nice strong breath, and it kind of fades a little bit, but it stays above 2,000 the whole day. There's no reason to fade this. So for every time that, you missed this trade, right, that I just showed, where was that? So I may miss it. So I apologize, but I was just showing it. Okay, so for every time, oh, the stupid breath. Oh, if I wouldn't have watched the breath, I could have got a short. Yeah, great, but for every time it does that and it kind of fakes you out, there's the time where it keeps you out of trouble. Because, oh, it's starting to fade, maybe we're going to roll over, and no, the breath is just staying strong. Anyway, that's my way of looking at the advanced decline line. Any questions, feel free to drop me a line, tiny@stockmarkettrendsx.com. Take care.